Hello guys, glad to have you on board again. Today we're going to start right with the cryptos and we're going to talk about Ethereum and its brand new release that the actual proof of stake might be at play by the end of June. The market is taking this as a good news, and that's quite understandable. So we do have some solo move coming out of Ethereum. It's been driving a little pop-up in BTC as well, but Ethereum is leading right now, and we can clearly see that from our ETH BTC charts. The spread chart is showing some strong reactivation from Ethereum versus Bitcoin right into the expected area. So what we can see is that we're accumulating in here. We're probably heading straight forward the bearish resistant context. So I think next target for the ETH BTC spread is to go in here. So we might expect in a forthcoming future, I'm not saying we're going to go straight line in there, but the objective is somehow to come up for this. This thing is going to go down, so the longer we take to get there, obviously the lower we'll end up. But it is hard to say. But regarding the length of this consolidation, I would pretty much expect a standard 45-degree angle to come right after. So we could forecast somehow that in the forthcoming months we could have 78% increased value on Bitcoin, on Ethereum versus the Bitcoin. So that doesn't mean it is a trade, even though I strongly think it is. So if you have a balanced portfolio between Ethereum and Bitcoin, I suggest at the moment that it is way more rationally invested having more Ethereums than Bitcoins in your portfolios. That's exactly what I have myself. All that says, it doesn't mean they will both increase value. What it says is that normally if they were about to lose some grounds, Ethereum will lose less than the Bitcoins in a relative value. That's all that means. And obviously if they were both about to rise, then we'll have Ethereum rising faster than Bitcoin. That's what the correlation stuff means. All right, so anyway, in a technical perspective, I think the 4-hour chart in here says it all. I'm going to go straight to the actual conclusion. I've been warning about this potential signal in here that could be worrisome, of this potentially being a fake breakout to just reintegrate and head straight to the bottom in 2 sets of waves. And in those conditions, that's the reason why I said we should be letting the stop losses in here safely away from those prices, not to be stopped out stupidly. That's not going to happen because that's what we had. We broke up, we pulled back, and now we're bullish again. So I don't nearly even think that this thing was a concern. All right, so we got a mature range. We broke out of this range. We pulled back to make sure this wasn't a fake breakout, and now we're fucking out. So what we have in here really suggests this is a breakout. Why? Simply because we could have had one in here, and I thought we were ready to surge in here and to bam. We didn't, but we had everything we needed. All right, we did context, trend channel pullback, context, so we could have broken up in here. We didn't. Back to trend channel, but not to context, and back to context, so we could have broken up in here and didn't. So what we've done is another fucking trend channel pullback, not going back to support context, and now we're back into resistant context. At some point, we're going to get through this, and when we will, I think a nice trend will emerge. And I even think that a stronger trend will emerge regarding how much attempt we failed. The time we'll get through. That doesn't mean we will. All I'm saying is that when and if we get through, the following trend is probably going to be solid and durable. Let me just delete those lines because they're going to just make my chart so ugly. All right, it's just for the purpose of drawing stuff. Anyway, all right. So what this means is that it is not guaranteed. There is nothing guaranteed in the market. All it says that odds are significantly bullish at the moment, and at some point I hope this breakout will set itself. So what do we need to do to make it valid? We need to accelerate through both the trend channel and the context channel. So for now, accelerating through trend channel, we're good, all right? We need to get through the context channel, which we failed in here. So are we going to make it this time? I think we will. We've got everything we need. We've got the breakout, all right? So breakout target, we're clearly breaking out a level. So those who want to take breakout trades in here, that's possible. You set your stop loss below the previous low in here, so you're safe to put a stop loss in here. But you're trading a 1-to-1 risk-reward ratio. So I would say you want a breakout trade, that definitely makes sense to me. That doesn't mean it's going to be a success. All it says is that it is risk limited. That's all we do in here. So yeah, I'll give you guys granted stuff if you want to go for this. That's it for cryptos. That's all I care about. Once again, Bitcoin may go up as well, but I don't nearly give a shit. All I care is for Ethereum to lead the way right now, because it's the one that gave the news flow. So I would like to see this news flow impacting even more on prices. There is a lot of potential in there, and if we break this area, there will be absolutely no sellers, which means no one to sell in the order books, and buyers desperately searching to get in there. So you can expect some surging price in this area. That's exactly what I wanted to profit from. This is the only reason why I was buying speculatively on the Ethereum and not on the Bitcoins. I want to catch on this very interesting portions of prices in which I think there will be absolutely no one looking at selling, and there is a pretty nice gain to do in here. So a very interesting breakout trade, though it doesn't come without a risk, which means that doesn't mean you're not going to be stopped in here if the breakout is reversed. Remember that we had early bearish signals in here, so we could do a double top, which will be the worst case scenario, and breaking it by the downside. And in that perspective, you're going to end up with a loss, and you will have bought the top to be sold at the lows. That's not the most probable scenario to me. Reason why I'm okay for a breakout trade. But still, be aware that this can happen. So if you're risking it all on this trade because it looks like a very potential trade, very good trade, low risk, whatever the fuck Phil said, if you just put your entire money in there, you just really don't get it. What speculation is not about that. That's the kind of stuff you're risking 1-2% capital at best. If you do anything more than that, then you're totally out of fucking context. Alright, so putting a stop loss in here, if you take this trade, you must be aware that this must not cost you more than 2% of your capital, which means you need to sell, well, to buy with a leverage 0.1 for the most aggressive traders. Do you really understand that? I mean, the most aggressive trader needs to sell 0.1%. Or 1%, no, what the fuck, what I just said. You need to sell 1/10, so 10% of their equity amount. So let's say you've got, for example, 10K on your account, then you might just buy 1K of Ethereum. That's it. That's the breakout trade, which means if you succeed, you're probably going to make 1K. If you don't succeed, you're probably going to lose. You're not necessarily going to make 1K, because the thing is that it's 50% expected gain, so you're going to make $500, and obviously in here you're going to lose $200. All right, so it's 200 lose, 500 gain. That's possible, and if you do an in-between risk management, it's going to be less than that. All right, if you do a first profit taken in here to pay for the stop loss or stuff like that. Multiple options once again in risk management. Let's focus this, because I think it's educational anyway, for you to understand how many possibilities you have to manage the trade. So let's say you take this breakout trade right in here. Doesn't mean we're obviously going to go straight line. That would be too easy. All right, all you know is that you don't really give a shit. Your stop loss is going to be there. All right. Anything that happens in there is none of your concern. It's just either price goes there, you're out, or price may be jittering in here. We don't give a shit until you find the bullishness of this price. Next target area is where you've got the target, obviously. So in here is a potential taking profit. That's an option. All right, those who want to secure 50% of the trade, you take half the trade off the table and you pay for the stop loss, which means if you go there, then what you do is that you rise your stop loss in here and it's paid. All right, And you don't have to worry anymore, and you just let it go to the final target. All we know is that if the prices gets there, which is the maximum target, you fucking profit take. Even if you think it's gonna go higher, even if bullshitters out there tell you the target is 370, who gives a shit? You targeted 270, you go there, you profit take, and you let the DOMs talk. That's simple as that. All right? This is all we've got to do. These are the three technical areas. The initial stop loss, I think the low risk stop loss must be set there, right, out of the major lows that preceded the range extraction. The next area is where you've got the target, right? It's definitely the next area of interest in here. And the other one is the target. All right, simple as that. If there is a trend, we'll simply follow the trend signal, which means we're going to have a breakout. The market normally pushes to divergence, then somehow a pullback, and then we've got the final excess. All right. That doesn't mean we're going to do it like that. All it says is that you stay in as long as you don't have divergence, pullback, final excess. Set it in the market. Simple as that. All right. And if we reach out to the maximum target, even if we still haven't done anything like a divergence or whatever, you get the fuck out. All right. As simple as that. Okay, so that was for speculative purposes. Now back to the conventional markets. S&P 500 as managed, I don't really get it to make this pullback. I mean, it doesn't even make sense to me. It is hard to figure out because what we're having here is kind of complex to read. As if I have a look at this 4-hour chart time frame, which I think is the one we should have a look at, then this is nothing close to a bullish reaction. We just got in here and we're oscillating out of this. There's still 43 minutes and we could be there in 43 minutes, which means those would just be upper shadow candles, not reintegrating the previous structure, kind of a strong pullback, bold stuff, usual stuff from the US. They show some strength because they so feared of what could happen if we drop. So I wouldn't necessarily be surprised that this kind of harsh pullback is just pure bullshit. Usual US bullshit. The thing is that we need to account this any fucking way, because if you have a look at this in a daily chart perspective, wow, what the hell is this? Just look at that candle in the cash market. These guys don't fear any fucking thing. I mean, Trump bullshitting what they've been buying for 3 months in a row. I mean, we bought hard on the Trump bullshit, and I told you this was bullshit, and I kind of felt that. So what happened yesterday didn't really surprise me. I mean, I was expecting that this was just bullshit and the deal wasn't doing well. So now we've got the proof. It's not doing well. So what does the market? It just doesn't even surrender a goddamn gain. So it's just crazy enough that the way we're trading right now is that we don't think. Everyone is just trading what we see, and we see no bearishness, so this is not bearish. I mean, oh my goodness, this is not going to end well. I really, really fear what we're doing right now, because when you see minus 5% in Shanghai, and that you see Wall Street barely closing lower, meaning like minus 0.45, that really, really gives me a bad feeling about the future, because all it says is that when Trump just basically bullshits the world, it works just fine. And when Trump has to pay for it, no worries, we're just fine. When I see this, oh my goodness, it never ended well in any fucking thing. It's just a biased stuff, all right? When everything goes well and nothing goes wrong, just means when it will go wrong, it will just erase everything we've been avoiding in the past. So it's just like a drug addict, like we said, okay? We like the stock market going up. It's so great. When it will go down, it's probably going to destroy everyone's wealth, but still, we like to enjoy a little bit of pleasure first. So yes, if that's how it's going to be, then it's going to be like that. I'm not going to fight it. Once again, the stupid guy in this game is the one who sells and hold. If the market goes irrational, let it go irrational and just be there. The time it will just fuck up, and it will. It definitely will. If we go down this dangerous path, this is the only way it will end. Just make sure you'll still be there for you to play this game. All right. So what we had yesterday, I don't understand it. I don't know what to do with it. All I can tell is that once again, Wall Street is buying the dip. What the fuck is that? For what reason? How dangerous this is? You know what I think about that. But still, prices doesn't come along for now, I'm waiting for weekly candle closes, which means if we do a weekly lower shadow candle, I'll be really, really concerned, but I don't really think we do it. So what we have in here in the weekly chart, right, in the cash sector, is that for now, we're holding on to the highs, all right, and we broke the lows with this, which is a hammer. So what it says is that we might be ranging this area for a little bit, all right, or we just fuck it up right now. All right, if we are about to reverse this, we could do it without a goddamn problem. But this weekly scenario in here suggests that we are maybe about to build a major top in the US, because this hammer structure, this is a hanging man. So this is a reversal structure on a weekly chart basis with a weekly bearish momentum. So I know some people say, oh no, Phil just sees bearishness everywhere. It's just a bearish guy. No, I'm not. I'm just technicals are bearish, whether you like it or not. It's just we're bearish cycle, but what the fuck are we doing at market top? So it doesn't even make sense. It is to me a speculative trade, dangerous speculative trade of 20% and I very well expect that we're going to just erase it, pure and simply. If things has to deteriorate, yes, we did had some good numbers last week, but this is just one good number out of many, many shitty numbers before. So, yes, the employment sector is good, but still, we do have a problem with the participation rate. So it is not just all bright. We still have shaded grays that Wall Street wants to avoid seeing. So it is still dangerous, but be cautious, all right? All I'm saying is that we're back in the selling business. I am back in the selling business on intraday basis only, and I'll obviously spare 50% of all the trades to build again a bearish swing trade out of intraday scenarios, obviously. All right, but that means I'm handling the risk in an intraday basis, not on a weekly basis. The 5% stop loss or stop losses 5% away from prices no longer going to happen. I've been stopped out from the weekly chart trade, so I'm back in the daily with 0.5, 0.75% stop losses, no more than that. On the asset prices, I'm saying, and I'm not risking more than 1%. All right? This is just 1% of equity per trade. All right. The VIX is playing pretty fucking dangerously as well. Just have a look at that. All right, so VIX is getting out of control. What we're having here, not weekly or the daily, says it all as well. So it really reminds me of this, the early moment where everybody think, all right, no, it's under control. Don't worry. It is just a little problem, but everything will be just fine. All right. What if not? Just ask yourself the good question. What if not? Because if we're about to go crazy fucking high, and I very well think we will, then just look at that. It took us no more than 5 days to just go from the 16 or 15 area to 20 fucking 5 or 30. I think that's the next stop for us. We've been stupidly trading for quite some time. If we're about to build a range, then there is nothing interesting in terms of volatility before we actually pick up to 30. So, are we about to build a range? I think we will. How is it going to be played regarding volatility? I think it's going to be violent, getting straight to 30, and I think we could be doing this in the next following days. So I'm closely having a look at the news flow right now, and mostly what the prices may do, because what I see is that we have a very dangerous pricing in the order books, and that doesn't look good. And all I can tell is that if anything just goes unaccording to the plan, the Wall Street good plan, everything just fine, we all do great, we have a deal, there is no Brexit, US is so strong, we can tariff whoever we want, there is no side effects or everything like that, right? The perfect world Wall Street's living in. So if they want to keep playing this game, I better hope this will go just fine, because anything that goes not according to their plan can be costing quite a lot. We've been identifying this cyclical structure in the VIX, and we said there is a high danger surrounding the beginning of May, and guess what? That's exactly what we fucking have. So it's happening. I cannot really explain why we've been identifying some structures. I don't know what the fuck Trump has been deciding to open his fucking mouth at the moment. All I can tell is that it fits the cyclical behavior we've been highlighting, and that's not a coincidence. All I can tell is that this is risk management kind of trades. This is why I was buying the VIX, and I still tend to believe there is a lot of potential to come. All right? I still manage the risk, but at some point on the VIX, I'm safe right now. Even if prices pull back, I'm not going to lose any fucking thing. So I'm ready to put some more money in. Just I will need to be clearly standing with you guys. If you don't risk manage, it's going to be tough because it might be violent. It might be like a launching pad, triggering just one moment, going straight line bearish. And if you don't have already bearish trades in the game, it will be hard to take breakout trades. This is why I would like you guys to speculate. But you need to know that if you speculate, you cannot risk more than 1% on each trade. And you need to secure those trade pretty fucking fast because what we have in here doesn't really suggest it's going to do well. I think it's quite the opposite as well, actually. I think what we can expect is that we fail in here one more time. We go in here and this afternoon we do have the sell-off. Or tomorrow, or I don't know. We could just build a fucking triangle in here like a dying close to this trend line, trying to hope and brace for the best until bang, the worst happens. That's simple as that, right? We do have a trend channel right now, all right? We can set it, all right? This was to anticipate it. Now we do have the we do have the trend channel. So this is what we have, all right? Next time we're going to break this down, all right? So don't you think, if you think we're going to buy this, oh no, we're not. This is where we're going to accelerate to the downside, probably to fit my first target, which is just, once again, you think this is enormous because you've just been brain fucked for weeks, and you think, oh man, no, that's enormous. How can you imagine that? It's too much bearishness. No, this is just a 23% retracement of the entire bullish trade. So if you think this is a big deal, this is just nothing. This is just the beginning of something. So if we go there, first of all, that's just normal, and I just think we're going to do it brutal. All right, think like we need to be panicking and euphoric and panicking and euphoric. We need to spread emotions in this market. So I very well won't be surprised if we're just about to die in here for a couple days, or even just setting ourselves ready for Friday, kind of sideways action in there before bang, we fuck it up instantly. All right. This timing in here feels very interesting to me because it is a crossroad, all right? It is a cross line in here between this support, which is the previous market top, all right? So this is definitely a psychological interesting area. And as you can see in here, we got absolutely no volume. So if we fuck up this area, the bulls are just getting out. So I think this is where we could have some some very strong acceleration, okay? So kind of going there, deteriorating, and bang, we go there, we work out this area, and bam, we fuck up another set of stop losses in here. And this is where I think we'll just go building the divergence, making the pullback, making the trend final excess out of this support area, all right? And this is what we might be doing, all right? Just getting in here and zoom the fuck out of this. Look how freaking tiny this is. All right, this is just barely retracing what happened. All right, we've got the bearish context in here, so everything suggests we're building an early range in here. We're gonna extract this range to the downside. First of all, target 23% retracement, and then 38 in a second structure. And I think if things still degrade in here, we still have a valid and solid growth in the US. Then eventually we'll be able to rise from ashes. But oh my goodness, if anything goes wrong in between, no deal with China, or even a worst case scenario showing up with the trade deal, if we have growth dampening for real, or stuff like that, we're not even going to hold this thing. We're just going to go low after low after low after low until we just panic trade. That's what I think is going to happen. I don't understand the recent numbers in the US economy. All I understand is that, all right, I'm surprised. I am, which means I could accept some bullish trades right now, but I don't nearly think it's going to be sustained. All right? I just think it's conjunctural effect, and that the next GDP number is going to be close to 2.2%, which means, once again, the 3.2, which would just have been a one-shot of good stuff, and we might eventually review the unemployment stuff we had on last Friday. I mean, these are just numbers. They'll be reviewed next month, so we'll see, all right? It is not something that is granted, and we've already seen in the past numbers significantly reduced after the update on the next month, all right? The refreshed numbers could be significantly lower than the ones we had last week, all right? So don't take any fucking thing for granted, all right? Still having a close look at the dollar, the yen index. I think we could be staying a little bit longer in this range. It's no big deal, right? If we're just working out this area, my stop losses are at the market top. So I've been paying for my stop losses at the market top. I think there is a lot of bears doing the same as I do, risk managing to build up some bearish positions in this market and just bracing and just hoping for this to go down, and brace yourselves for the bulls. Simple as that. The bulls have their stop losses in there right now, and they will hope for this level to be sustained. As simple as that. All right. Each market constituent has its own purposes, and let's just have a look at the 14.6 level retracement. I think we might have been doing it yesterday. All right, go here. No, not yet. All right, this is where we've got the 14.6. So we're not even 14% retracement, and people are already screaming for buy the dips. I mean, that doesn't even make sense. All right. So that's it for today. Wait for more information on the stock market. Cryptos are doing well at the moment. I'm watching closely for the WTI. I think there is a little bit more to hope for this. Kind of a deeper pullback, more in the 61% area. We do have a breakout target in here, so I suggest you put an alert in there and just watch out for intraday trades in this area. Looking at speculative bearish trades in there on a bearish range structure, I guess kind of selling in there for a bearish trade and trending trade coming along the way. Euro dollar, GBP dollar, we don't give a shit. It's unable to read. AUDNZD has been pullbacking as expected. So those who've been buying the lows of this range, you secure the trade. We're reaching out to the target areas. There is still a little bit of upside to expect, as we don't have any signal yet. I think you can push this up to 61% or 76% fib, but this is where you're going to profit take. You have to, all right? This is taking profit area. Whenever we get in there, you have to lock on your gains, all right? We're probably going to have another pullback. That doesn't mean it's going to happen. All it means is that if you bought this range trade, then this was the target for this range trade. Don't be more aggressive. You can keep having keeping 25% of the entire position sizing for swing trades. I'm totally agree with that. The major trend could be bullish, but still, I think the range is immature at the moment, so keeping some side trades doesn't even make sense to me, right? That's it. I'm still waiting for news from Tesla's to see if they invalidate the breakout or if this was just a dumb pullback to just bang, fuck it up one more time. I'm still bearish. I think this trend channel will be broken down. So next stop is in here. If we find some bullish signals, I'll profit take. Okay, that will be our divergent structure. If, for example, we go there, shows no signals, and bang, fuck it up, I'll be pretty fucking happy. I'm bearish in here. I've been taking a reinforcement yesterday evening. All right, so I took an additional trade on Tesla in here. My stop loss is still there. I'm still on top of the previous gap, so I'm pretty safe. I don't think there is not a chance that they can take me down. No, sorry, my stop losses were there, and now they're close to this area. Right, so I'm pretty fucking safe, and I still have money available to reinforce a little bit more if needed. That's pretty much it. Let me have a look at whatever I would be forgetting. Alright, gold. Eventually something to do with the gold. Still nothing. They're accumulating, right? So we're building the support area. CNC, trend channel. So bam, next time we're gonna fuck it up. So look for 1 hour chart trades if you want to do. This is the range accumulation. Alright, so as we said, it was buying in here, securing the trade for me. That's what's been done. If it breaks up, then you want to see the market making context, trend channel, context, breakout, all right? So watch out for the breakout. I think it might be coming. As you can see, everything suggests it will. The range is mature. We can clearly see the sets of waves consolidating. We can see the high-low. These are equal lows, but still, that's a double bottom. So if we go there, there's a breakout trade, but first you need to make sure the market has been testing the trend channel, getting back in here and breaking up in here with a little cross signal. You know all the usual stuff, right? So if this happens, then you want to be ready to take this. I'm going to add an alert in here because I think it worth the shot. So it's going to be framework, trend breakout. Don't necessarily need to have the candle close. So it is gold, H1, trend breakout. All right. See, that's easy. How easy this is and how convenient this is. I mean, if I had that years ago, I would have been so pleased. It took me so long to get to make this shit work. So anyway, all right, that's the breakout signal. Waiting for it. It's still pending, so you can expect some sideways action in here. So here's a good sign. It's whenever we'll have some bullish outburst out of this that we'll be able to do something out of here. That's it for today. And yeah, we're not just going to terminate. I said that for the French users, so I'm going to be fair play, and I'll be doing it as well for you guys. So this is what we've been talking about yesterday, talking about the new CME contracts, or micro contracts on the oh, sorry, this is in French, but still, I'm going to translate that for you. So CME has just been putting micro contracts, futures contracts available for trading out of 5th of May. So it's already in, all right? The thing is that what's new about this thing is that it's approximately, all right, what's great is that this is intraday margins, all right, margin requirement for intraday trades. I mean, this is for scalping purposes, so this is definitely what we're going to do. What it means is that all the trades that will be held in an intraday basis, so you open them, so the day you open them, the margin requirement would just be 40 fucking bucks. And that is the lowest I've ever seen, and that's far lower than what I've even imagined, which means even the low value accounts will be able to handle future trading. That doesn't mean you'll be able to trade with a $100 account. That doesn't even work like that. If you do this, you're definitely going to lose that money. All right, it's obviously we're going to need more money in here to avoid margin calls and stuff like that, but still that means that 3 to 5K accounts will be able to safely, really safely, trade futures market, and that's a first in history. That means low capital and retail traders will be able to future trades like professionals. All right. So once again, that's not the best time to get into trading because we're probably at the end of economic cycles. There is some jitters, and having some retail traders getting in the market at the moment is not a good sign. It's more the worst sign. But still, it's because retails are generally very few. They're lacking of experience. Most of them are just beginners pressing buttons, and they're very dangerous emotions and stuff like that. So normally you and I, we're retail traders, all right? We're trading on our own accounts, so we're all retail traders. But our advantage versus others is that you must get yourself educated. I'm doing anything I can to educate you. So which means you and I, we're retail traders, but we're not fitting what we said earlier. The retail traders are emotional, stupid, inexperienced, and stuff like that. All right. So what you need to do is to rise yourself out of here to make sure that you're in the top of the basket. So anyway, $40 intraday margin for one contract. That's great. That means even tinier accounts will be able to buy this shit. Simply because normally, just calculate this out. The previous mini contract, all right, was $25 a point. All right, the S&P is almost 3,000 point, which is going to round the numbers for easier calculations. All right, which means in order to buy a future contract of S&P on the E-mini, all right, which is half the big contract, it would have costed you, all right, 25 times 30. So that's not nothing, all right? And it's just for just one contract, and that requires at least a 50% margin plus stuff like that, right? So it wasn't possible for anyone having less than 20K accounts, all right? So now what we're gonna do is that we're gonna just divide this. Instead of 20K, like I said, 3 to 5K is gonna be totally viable for future trading. Then obviously it doesn't come safely. All right, we're going to calculate the costs and fees in here, how this is important for us. So this is what we're going to have, because you're going to have fees, all right? So the thing is that if you want to trade in TradingView, and that's a good news, we're going to be able to trade right into TradingView, all right? Because we're going to have a CQG partner, which means if you get in here, you might have figured it out, right? Oh, say hello, CQG, which means you'll be able to fucking trade into TradingView, all right? Trade from your charts, having the order book in here, so that's huge. I mean, I'll finally be able to have everything in the same place, and that's going to be convenient, all right? But in order to get this CQG feature, we're going to have to pay for this, all right? This is a CQG trade route. It's a 10 cent per side. All right, so it's buy and sell, and it's a per contract. All right, so it's more likely 20 cents per contract on a round turn. All right, there we go. You get in and out. That's what we call a round turn in the future markets. All right, so that's how you calculate the fees. You calculate that of round turn. When you bought and sell, each contract will cost you 20 cents of fees for the trade route via CQG if you want to trade TradingViews. Things, and then you've got multiple rates. All right, so you've got the flat rate, requires at least a 10K deposit, and in that perspective, the all-included fees will be for the micro E-mini 0.74 round turn. All right, so this plus 20, that gives you a 95 cents round turn for a micro contract. Right, and remember that it is $5 a point. The future contracts trade with ticks, all right? That's the minimum ticks in a point. There's 4 ticks, which means a tick is 0.25 index point. So it is 5 divided by 4. It is $1.25 per tick, which means all we care about to have a sustainable scalping strategy to have those fees below the tick price. So the tick price is 1.25. In here, even with trade route, it's going to be 0.74 plus 20, so approximately $1 below 120, so that's good. All right, we can scalp on those numbers, otherwise that wouldn't have been possible. So it is not good numbers, obviously. We can get that a lot cheaper, but still it is viable for users who have 10K account and want to have a flat rate. What it means is that those of you who want to get into trading will trade very, very few amounts and very few numbers of contracts. This is probably what you want to get down to, but you're going to have to have 10K to deposit. Then you got volume traded deposit, all right, which means it requires at least $100. But like I said, we're not going to make $100 account. That doesn't even make sense. So minimum 3K. But those who have not enough for the 10K, this is where you're going to go, all right. What you'll have is the micro E-mini, all right, with a price of 0.39. This is per side. So remember that the round turn is twice that amount. So it's going to be 80 cents. For a round turn on global on CME fees, all right, plus the 20, all right. So it's going to be $1 flat in here, all right. Pretty much the same actually. Then this is where it gets interesting. If you're gonna put a little bit more money in here, you got the high volume tiered. In here, we're gonna be able to trade with much better fees. Like you see, between the volume tier, all right, and the high volume tiered, which is great in here, is that for the same amount of traded contracts, all right, 1,000 contracts, is going to be priced a lot cheaper, all right. In here you got 14 cents, all right, which makes the round turn at a 50 cent. So it's even half the price of a tick. And in that perspective, that's really, really interesting. And that's a very, very good price. All right, very, very good price. So I'm gonna have to dig this a little deeper because I think there is something hidden behind this number, but I'll have to figure this out. And otherwise, I'm gonna try negotiating this. I need to figure what the fuck is this, because I think it's It's a special pricing, and as we're many in Discord right now and using my strategy, we have some power. So I'm gonna make some kind of a polling system right into TradingView to just try to know how much people will be interested in getting into this, just so we'll be eventually able to negotiate something with them. Because if, for example, we could be 1K users, I mean, 1,000 is not that big of a deal. I mean, there's 3 times of, that amount of people watching me every day. So if just 1 out of 3 people is ready to just try it out, we'll just be 1,000. And I think we can just be ready to unlock this pricing for everyone, which means even if you have tinier accounts, all of us will be able to get this pricing, right? These 12 cents. So it's a 24 per turn. That's great. If we could have that, we're going to have some really cheap prices for scalping. All right? But that doesn't nearly mean that everyone will be able to scalp. Be ready for it? I think you might be trying it out, and I stand for this. Before even giving you my strategy on scalping, we'll start with the psychological show about scalping, because just 20% of you guys will be able to handle scalping. Not in the beginning, because everyone will feel the same way. When you'll start scalping, you're gonna like it. You know what? This is exactly what's gonna happen. You're all gonna like it because it's simple. The rules are simple, all right? The rules are really simple. The job itself is pretty simple, but this is where the ugly part shows up. Someday you're gonna wake up pretty nasty, nighttime. You didn't sleep well, had some problems, or you're gonna be sick. You're gonna be having some problems in your life, because once again, life also impacts trading. And when you short-term trade, it gets an even deeper impact on the way you're gonna trade. Make a single mistake out of applying the strategy in here, and you're gonna have an instant sanction. All right, it goes instantly. All right, and those who will fight that, all right, those who will refuse to be wrong because they were just tired or lacking attention or something like that, if you just try to bend the rules, or if you get ineffective at applying simple rules, it's just gonna be really dangerous, because it's not gonna do well. You're going to fight it, and you're going to have an enormous amount of losses in the end, because scalping cannot end up turned out into an intraday trade because it didn't work well. And that's the mistake that some of you guys will do. You'll take a scalp, it won't go accordingly, so you'll say, no worries, you've got the intraday support in here, so I'm not getting out, I'm refusing to lose, and you just transform the scalp into an intraday trade, but that's a losing trade. You can do it on the opposite way. A winning trade, you say, okay, there is much more potential, so we're going to do an intraday trade out of this scalp. But if you do the opposite, transforming a bad trade into an intraday trade, then you can even go worse than that, transforming this intraday trade into a swing trade afterwards. All right? But if you do this, oh my goodness, it's going to really cost you a lot, and it's probably going to cost you your account. So that's not going to happen, and some people will not be meant to be scalping because it's easy, and simply because easy doesn't fit everyone. Some people will try to bend the rules, some people will just refuse losses. So we'll start with this. Not today, we're not going to do this right here, but I'm going to do a... So first thing first, we're going to do psychological show in being the first one. Then we're going to do the technical approach, and then the fundamental approach about the market order books and stuff like that. All right, and then we're kind of making a trading application system video probably afterwards. So it's going to be a set of 4 videos about that. First is being psychology, and we're going to put it in schedule. Whenever we'll have time. It depends on Wall Street, basically. If Wall Street just leave us alone and give us some fucking volatility, then we'll be able to swing trades again. If they just still lock down the volatility just like they're doing, and preventing us from trading by just locking down every fucking thing we could do, if they do it once again, then we'll take this time for more educational purposes, including this kind of stuff. Right? Anyway, and that being said, I'm going to leave you guys with that. Just one last thing to tell you. Probably tomorrow I won't be there. It just all depends on the weather forecast for tomorrow, which means it's complicated. So the thing is, I don't know, all right? So if you don't see me publishing anything tomorrow, then don't be worried. It's just absolutely normal. I'll just be free-flying. So, free-falling. So the thing is that if weather's cool, I'll be doing it. If weather's not cool, I'm not going to be doing it, and therefore I'll be there, and I'll make the usual shows and the usual daily stuff, right? But if nothing shows up, don't be surprised.